Welcome to Wealth Kingdom channel. In my videos, I will explain about the basic financial terms in simple language. In this video, I will explain about the tools required to analyze the stocks and trade the securities. I will also explain about fundamental analysis. First, let me list out the tools, mainly websites, useful for analysis purpose before making investment decision. First one is the official website of National Stock Exchange, which is nseindia.com. This website provides all the details related to the trades executed for the securities available in National Stock Exchange. Next comes the official website of BSE. Earlier, it was called as Bombay Stock Exchange. Apart from the trades details, this website provides few basic fundamental details such as earnings per share, PE ratio, revenue, and net profit also for the selected stock. Next website is charting.com. This website is very useful to filter the stocks based on our desired criteria. We can run the scan manually and see the filtered results without any subscription amount. If we want the alert and the filtered stocks to be sent to our mail or sent as notifications, we should have premium subscription. Next one is TradingView. This website will be helpful in technical analysis. We can set up and view a maximum of 3 technical indicators at a time without any subscription. If we want to set up and view more than 3 technical indicators at a time, then we need to go for a paid plan. Screener.com website helps us to check all the fundamental details related to a stock at one single place. Most of the key parameters of the fundamental analysis, such as price to earnings ratio, book value, dividend yield, return on capital employed, and return on equity, are displayed at the top of the page. To achieve a sustainable growth in the stock market, information related to just the stocks we have bought or planning to buy alone is not sufficient. We need to keep our eyes and ears open to collect the details about the sector to which the stock belongs, impact of Indian economy on the stock and sector, impact of world economy on the stock and sector also important. These details are available in the Money Control website. If we subscribe for Money Control Pro, we will have access to important articles and analysis related to the stocks, Indian economy, and world economy. Apart from special access to important contents in the website, we will get daily and weekly updates by email as well if we have Money Control Pro subscription. This will be helpful to a large extent in taking a better investment decision. Next website which is useful for the analysis is moneyboy.com. This website helps us to test the strategy we have developed without making actual investment. This is the digital form of paper trading. We will come to know whether our strategy will be a profitable one or not by doing the paper trading in this website. Actual trades executed in the stock exchange only will be executed in moneyboy.com as well. Hence, we will get the results close to the real-time trades without making actual investments. The strategies which are profitable in Moneyboy can be applied in the actual trading. Now, let us look into the tools which are required to invest in the securities in the digital form. First one is trading account. This is provided by the stockbrokers. Trading account is required to buy and sell the securities. We need to pay charges to the broker based on the types of trade, such as intraday or positional, equity or derivatives. Next one is demat account. Equity shares can be held in demat form only. Mutual funds and gold bonds can be held either in demat form or physical form. National Securities Depository Limited and Central Depository Services Limited are the two companies which provide demat account service in India. To hold the securities in electronic form, we need to have a demat account. When we hold the securities in demat account, risk of loss of securities and risk of damage of physical certificates are avoided. Next comes the bank account. Now, almost all the investments in the capital market can be made through bank transactions only. Hence, in order to trade in the securities, we need to have a bank account. To open all the above accounts, we need to have a valid ID proof and address proof such as Aadhaar card, voter ID, and passport. We should have a valid PAN card also. To create wealth in the long term and to get returns that beat inflation, investing in equity shares is very important. But that is possible only by investing in good growth oriented shares. Fundamental analysis helps us to identify these stocks. I will now explain few important parameters which are required for fundamental analysis. First one is sales revenue or simply revenue. It is the total amount received or receivable from sale of goods or services rendered. There should be consistent increase in the revenue during the last 3 to 5 financial years as well as during the last 3 to 5 quarters unless there was a major economic disruption. Next comes net profit. When we subtract the cost of goods produced or services rendered, depreciation, and taxes from the revenue, we get net profit. Cost of goods or services include cost of raw materials, employee salary and wages, rent, and other such administrative expenses. The net profit margin of a company should be equal to or more than the sector average net profit margin. Higher the net profit margin, better the company's performance. Next parameter is earnings per share. In short, it is called as EPS. Earnings per share is calculated by dividing net profit by the number of outstanding equity shares. Higher the earnings per share, better the performance of the company. Next comes the price to earnings ratio or simply PE ratio. This ratio compares the share price of a company to its earnings per share. PE ratio is used by investors and analysts to compare a company's value against similar companies in the same industry or for a single company across a period of time. PE ratio helps to determine whether a share is overvalued or undervalued. When PE ratio is high, the company is seen as overvalued. When the PE ratio is less, the company is seen as undervalued. It is better to invest in a company with low PE ratio. Next one is book value per share. Book value per share is one way of assessing the value of a share. First, total book value or net asset value of a company is calculated. It is calculated by subtracting the liabilities of a company from its total assets. Then, the total book value is divided by the number of outstanding equity shares to arrive at the book value per share. It is better to invest in a company which has a higher book value per share. Thanks for watching this video. Please post your specific questions related to stock market tools and fundamental analysis. I will try my level best to clarify your doubts.